If you're looking for a great annuity presentation, then I'm going to show you an annuity presentation that's backed up by hundreds of millions of dollars worth of sales. Hi, my name's Jeremy Smith, and over the better part of the last 15 years, I've been an agent, a manager, an owner-operator of an insurance brokerage, and over the last 5 or 6 years, I've been a business coach, traveling the country to help agents and agencies grow their practice. Stay with me because I'm going to help you grow yours. If you've been on YouTube before, then you know the game. Please like and comment, and don't forget to ring the bell. So when I was a producer, if there's any subject that I had a claim to fame for, it would have probably been annuity presentations and annuity sales. It's one of my main focus areas back when I was producing. Today I'm going to show you my annuity presentation, okay? And you're going to figure out really early on that my annuity presentation, the goal of it is to overcome all of the objections before I ever get to the objections, okay? What I'm going to show you is not rocket science, but it's a good order, and there's a lot of storylines in here to overcome the majority of the objections you're ever going to get when you're presenting and selling annuities, okay? Step one of my annuity presentation is a step that actually starts at the very end of my fact finder, okay? I literally probably still have the fact finder turned over with notes about what they've just told me, okay? There's about 4 key points I want the inside of step one of what I call the money talk, okay? First thing is I want you to understand that this is an open forum conversation, okay? I want them to talk. I got things that I want to say, but I want them to talk. I want to hear what their education is and what their knowledge is of the economy and the stock market and finances. I want to hear them talk about what concerns they have. I also, in that same motion, this is a great opportunity for me to show my education and my expertise, okay? I want to be able to show them that I've been there before and I know as much as anybody you're going to get in front of about the options that are out there for your retirement money, especially the safe options that are out there. Now, obviously, one of the big things I want to hear from them is I'm hoping to hear from them concerns about the casino stock market, okay? I want to get it out of their mouth, and hopefully the other spouse, if there's somebody else there, to hear it and maybe even confirm it, that they're scared that the fact that they've got 85% of their money in an IRA or a 401k or something tied to the stock market, okay? I want to hear that come out of their mouths, because if I hear that come out of their mouths, I know I'm halfway home already on making an annuity presentation / sale, okay? But the other thing out of my own voice that I want them to hear is I want them, again, to hear my expertise, but I'm going to start making my presentation on why I don't think that where their money is at now aligns with the goals and philosophies they told me back in the fact finder. For example, let's take for an example the role play we did a couple of videos ago where the guy told me that he doesn't consider himself a risk taker, yet literally 90% of his money was in an IRA. Okay? I normally will go through and explain to them, listen, we've been on a ride right now where the stock market has been up for well over a decade now. Straight up. We're in a time right now, I mean, gosh, I don't even have to tell you about this, where the world's crazy. Okay, there's all kinds of things going on right now. Bad indicators. You can turn on any channel you want. You'll be hard-pressed to find any financial analyst that says the stock market's just going to keep going like this forever. You'll find some that thinks it's going to bounce around, some that thinks it's going to get stagnant, some may think we're going to have superinflation. You'll find a good percentage of people that think there's a crash or at least a correction coming in the near future. But there's nobody saying, hold on to your hat, the stock market's going to just keep going up. Okay? Well, because of that, and I assume you share in those same beliefs and philosophies, because of that, what I'd like to do is I'd like to talk with you about what I think one of the best safe money options in the country is, okay? I want to talk to you about a product where you can get stock market type returns without taking the gambles. You want to hear that? Once again, I've got permission to go on, But I've already, in that step, I have initiated so many things that we're going to talk about in steps 2, 3, 4, 5, 6, and 7, and 8 of the annuity presentation. And again, we're going to be overcoming objections right and left. With that conversation, we just overcame one big one, and that was by getting their buy-in, whether verbal or just their body or both. They've already bought into the fact that their risk tolerance and what they feel comfortable with does not align with where their money is at right now. Man, you're a long ways down the road with just that right there. So continuing on with that theory of overcoming objections before they actually come up, I want to take you to step 2 of my annuity presentation. Okay? I get, as I travel the country, all the time people will tell me about objections that they get and how do they overcome it. Okay? So one of the most common ones that I hear out there is I've got a guy, I've already got an agent, or I've already got a financial advisor. Okay? And that's a really hard one to get over, okay, to get around, because the trust factor from that person to you may be the difference of 20 years versus an hour, okay? It's a really hard one to get around. And so I've just included it into our annuity presentation that I say every time, okay? And that step is called the Fi Guy Talk, okay? So I have tried to make a pretty little diagram here on a PowerPoint so you can see it, but typically I'm writing this out on a notebook in front of a client. And what I write is followed up by a story that I tell. Again, you can use my story. Tell them that I've got a business coach that tells this story all the time. Early 2000s, I was in the mortgage business, and I partnered up with a couple financial advisors. And the reason we did it was really just so we could share office expenses and the goal of being able to refer my clients to them and back and forth, okay? So I set in on hundreds of appointments. Normally, it was younger people. It was 40-year-olds, for example, coming in to say, I think I want to start planning for retirement, okay? And so they drew up every single time the most elementary little diagram, okay? They wanted to know how old were they. They wanted to know how much money they had. And they wanted to know at what point is the goal of retirement, okay? They wanted to know those because that's how they knew how aggressive they had to invest their money in order to hopefully make this goal of retirement happen. Okay? What I need you to understand is that is not what I do. Okay? It's no different than a doctor versus a plumber. Okay? Their job, a financial advisor's job, is to help somebody get to retirement. We have two totally separate philosophies on life. I, as an insurance agent, my job is to help somebody plan their actual retirement, okay? We have different philosophies and we use different tools, okay? So many times have I walked in and seen a 70-year-old that had just as much risk exposure as I do at 45, okay? That shouldn't be the case, should it? As we get older, our risk tolerance should go down. If 2008 does happen again and the stock market crashes, I'm not going to be any happier than the next guy. But one thing I can tell you is I've got a bunch of working years left, hopefully, to go and make that money back up. If you're 65, 70, 75, if you're retired, unless you're willing to go back to the grindstone again, the only option you're going to have is to change your standard of living. Okay? And that's why a risk tolerance has got to get less as you get older, and the importance of safe money becomes invaluable to somebody at retirement age, or even if somebody just getting close to retirement age. But the point I want to make to you right here is that I am not trying to come in here after the short period of time that we've known each other and say, do business with me, not that long-term financial advisor you have. What I'm trying to tell you is that we're not comparable. We do two totally different things. His job is to get you to retirement. My job is to help you plan for your retirement. Guys, if you will do that little diagram and that little spiel, learn those verbiage and those words, I am here to tell you that will get you over on the mountain a lot of times when you find yourself up against an advisor or a long-term relationship. Rather than trying to say why you're better, just explain to them we do two totally different jobs. So once again, continuing on now with overcoming these objections before they come, I'm going to take you to what I think is step 3 of a good annuity presentation. It's a step that I call the rule of 100, okay? Most of you that have been selling annuities or you have much financial background, you've probably heard of this step, okay? If you're not using this or talking about this, definitely something I think you should probably add to your presentation. A lot of you very well may already be using it, but I want to show you a clean way to explain it. The rule of 100 is pretty simple, okay? And what I'm really going to do here is I'm going to explain, hopefully, to the client or the prospect that their goals and philosophies don't align with what their current portfolio is, okay? And so here's the rule of 100. And now I'll start acting like I'm talking to an actual prospect. But the rule of 100 is this. If I'm 25 years old, then I want 75% of my money at risk, taking gambles, earning as much interest as I can, even if I'm kind of gambling a little bit. As I get older in life, that risk tolerance should go down. If I'm 50, I should be 50-50. I get to 75 or I get to retirement age, I should have a whole lot more of my money with a precedence around safety than a precedence around interest rate or gains or risk, okay? And what this diagram, and once again, I normally write this out for them on a piece of paper to show them that, you are 71 years old. And here's where you told me that you're not a risk taker, okay? And yet, as we look through all of your money, I might even pull out a calculator. You're at 85 and 15, okay? 85% of your money is at risk, and you're retired, okay? That is out of line in most people that talk about retirement planning. Would you agree with this scenario or not? Again, I'm asking that question at the end because I want to get buy-in from them. That is the rule of 100. Okay, step 4 of my annuity presentation, I think, is a great step. This is a step that I call the history of annuities, okay? Again, I keep talking about overcoming objections before they actually come to you. Let me tell you an objection that if you've sold many annuities in your life, or presented many annuities in your life, you've heard before. You've heard people say, I've heard bad things about annuities, okay? Well, you and I both know there are bad things about annuities, okay? So one of the best ways to overcome that I've heard bad things is to do what I call the history of an annuity, okay? And you can draw this document up just like I've got it on a PowerPoint here, okay? And here's how I would go through it if I was drawing it up. I want to explain to them, I'm going to tell you just real quickly, this will take a minute and a half for me to explain the history of annuities to you, and I think it's really important for you to understand. There are different types of annuities, okay? There's really 3 types of annuities. The first annuity ever invented was called a fixed annuity, okay? And when you think fixed annuity, think CD, okay? They're 100% safe, and you have a guaranteed interest rate based on the length of time that you're going to keep your money in that annuity. The only real differences are it's with a bank, or a CD is with a bank, and a fixed annuity is with an insurance company. And oh, by the way, fixed annuities are normally paying somewhere in the neighborhood of about 2 to 3 times what a bank CD pays. So that's a good option for certain people. You find somebody that's got CDs, for example. That's a great example. It's the same. The reason why they have their money in CDs is so they can go get it at it in case of an emergency. Well, the same thing applies to an annuity for the most part. It's just a lot better returns, a fixed annuity, okay? On the other end of the spectrum is what they call a variable annuity, okay? And I'm not here to tell you that variable annuities don't have a purpose for certain people. I personally, I'm not a financial advisor. I don't deal with younger clients typically. And I am not a very big believer in variable annuities. And I'm saying that with kid gloves because I'm really not a fan at all. The reason why, and I'll tell you this flat out, is that almost every client I've ever met that had a variable annuity, the one thing they all share in common is almost every single one of them, when sold that variable annuity, did not have it properly explained what it was that they bought. Okay? The thing about a variable annuity is that there's no safety. Okay? And they're pretty expensive. Whether they know it or not, it goes up and down with the stock market. There's no guarantees on their account value. And oh, by the way, and they almost never know this, on average, they're paying 2, 3, 4% a year in fees, regardless of whether they make money or lose money. Okay? In the middle, there is a product called an equity indexed annuity. Okay? And this is what I specialize in. I specialize in being able to analyze and find the best safe money options in the country for my prospects, who are all people who are retired or getting ready for retirement. Okay? I have access to virtually every product in the country that is a product that allows you to earn gains in the stock market without taking risk, like a variable annuity or an IRA or a 401k or anything else that you can lose money in, okay? And I want to talk to you today about an equity indexed annuity, okay? And an equity indexed annuity, you really got the best of both worlds, okay? You put your money in, and your principal will never lose a penny, okay? And every allocation period, which may be every year or two, whatever we decide, your gains are locked in, and that becomes the new bottom level for what your account value will ever be. It can't ever go down. It can only go up, okay? There are little, almost normally no fees when associated to an equity indexed annuity unless you put riders or stuff on them. To me, an equity indexed annuity is, without a doubt, the best product that somebody who is retired or getting close to retirement can look into. If you've been at a breakfast table with all your retired friends before and heard somebody across the table say, I hate annuities or stuff, I'd be willing to bet that it wasn't an equity indexed annuity. It was probably a fixed annuity because it doesn't earn big returns, or if it was a variable annuity because it could lose money and it was expensive. If it was an equity indexed annuity, it was at a time when equity indexed annuities had what they called caps on them. Okay, and there still are equity indexed annuities out there that have caps on them. And what a cap is a ceiling. You may get into an equity indexed annuity that allows you 100% of the market gains, but only up to that cap. Maybe it's 3 or 4%. So when we have these years where all of a sudden the market goes up 20% in a given year, those people are not very happy. Okay? Let me say one thing real quick. People should buy equity indexed annuities first and foremost for safety. That's the reason why people buy them. But in all reality, people want safety, and then they want to earn as much money as they possibly can. What I'm here to tell you today is that I have access to top shelf equity indexed annuity products that will earn you and allow you to earn gains of the market, high percentages, maybe upwards of 75 to 85% of all of the market gains in the stock market, and yet still protect you 100% on down days or down years. You can't ever lose anything, okay? That is why I think that at bare minimum, and I'm going to show you here in a second what I think the best equity indexed annuity in the country is for you, but it's why I think that all people that are retired or getting close to retirement have to do some research and understand the values of an equity indexed annuity, because the values of an equity indexed annuity today, they're not reflective of what any annuity was just 8-10 years ago. That's the history of annuities, and I hope you put that into your product presentation. Okay, so let's move on to step 5 of the annuity presentation. These next couple, they're pretty simple. I'm not going to take a long time to explain them to you. But step 5 for me is reviewing their current product, okay? I think before we go into a recommendation on a new product, it's really important that you take just a few minutes, or a couple minutes at least, and explain to them how the product they're currently in works. So for example, if you find somebody that they've got their money in an IRA, you may just say, hey, listen, your money right now is in an IRA. Let's just talk about the good and the bad of the IRA. Obviously, the good has been that you've enjoyed years and years worth of tax deferral. Okay? I have no problem with an IRA. In fact, what I'm going to talk to you about here in a second is going to continue your IRA just like it is right now. We're just going to put a safety net around it called an insurance wrapper. Okay? But the downside to where your current IRA is that it's subject to market loss at a time when you're retired and not planning on going back to work. Okay? Again, that little spiel may change based on what you're up against. If it's another annuity you need to talk about the goods and the bads of that particular product. I assume there's probably more bads than goods that you're about to replace with the new product that you're going to recommend. But taking a minute to review their current product is an absolute step you got to take. Step 6, recapping their goals and concerns. And so what I'm talking about is almost going back to some of the conversations we had back at the end of the Fact Finder. You told me that you're not a risk taker. You told me and agreed with me that you believe that since the stock market's been going up for about 12 years in a row now, that there's a good chance that we've got a correction or a crash somewhere in our future, okay? And you've told me that the one thing that keeps you up at night most is making sure you've got enough money to live the rest of your life at the standard of living you live right now, okay? And so with all that in mind, and now I'm about ready to go into step 7, where I'm going to start talking about the company, and then I'm going to start talking about the actual product-specific recommendation. Let's not skip over step 7 real quick. It is important. This shouldn't take long. This should take 45 seconds probably. But it is important that you talk for a second about the product company, okay? The company that's offering the product you're going to recommend. I'm hoping that it's an A-rated carrier or a B-plus rated carrier. It's a strong carrier. Find a company brochure. Sell the security of the company that you're about to recommend. And then we go into step 8, which is for you to do your actual annuity product specific presentation. I can't go through that with you here in this training because there's a million annuities. Each one of them have got different bells and whistles. I would just tell you that at this point, you probably should hone in on a couple annuities. Don't have and offer 15 different annuities. Get and be a master of a couple rather than a jack of 100, okay? Know what those points are. Know them at the back of your hand. Any questions they're going to ask specifically about those products, you should know them without having to look them up. It just adds credibility, and the credibility thing when you're talking about money is everything, okay? So know your product. Make sure that your actual product specific is coherent. Once again, like everything else we've talked about, your processes and your documents, or your process is documented. Your presentation, how you're going to explain it, is documented. And by the time you get through all of that, you, in my opinion, now have a rock-solid annuity presentation. We've talked through that, an 8-step process where we've talked about the money talk, the five guy talk, the rule of 100, the history of annuities. We've talked about their current product. We've done a recap of their goals and concerns. We've sold the company, and we've now sold the product. If you do this, your success ratio is probably going to go up dramatically higher than where it's at right now. That's my hope anyway. And just to pull all this stuff together, we've been talking about a sales process where you've got to warm up a fact finder, the 4 steps prior to the product presentation. We just talked about an annuity presentation. That just slides in there. That annuity presentation is your step 5 of your sales process, followed by the close, and go on with steps 7, 8, 9, and 10 of your presentation and repeat as necessary, okay? So I'm going to be doing more and more presentations about different products. That was our annuity presentation. Again, that slides right into step 5 of your product or of your sales process. I want to remind you to please hit subscribe and ring the bell, and we'll look forward to seeing you on our next video. Thank you.